Listen up. We need to talk about your money, not your daily spending, but the foundation of your financial security. The world is flashing warning signs. You work hard, you save. But what if your dollars are losing value right now? This isn't a scare tactic. It's a reality check. You can't afford to be financially asleep at the wheel. The game is changing. True wealth isn't just a big bank balance. It's security, freedom, and control. The world's wealthiest, big banks, central banks, are making moves to protect themselves. They're not chasing risky trends. They're buying gold. When the smartest money in the room moves, you need to ask why. This isn't about getting rich quick. It's about being prepared and in control of your financial destiny. Massive government spending and money printing are challenging the value of your money. Political and economic instability is now a daily headline, not a distant threat. You must understand these forces. They impact your savings, retirement, and your family's future. So lean in. We'll break down what's happening and what it means for you. We'll talk gold, silver, and how to build a financial plan strong enough to weather the coming storms. This is your wake-up call. Open your eyes, get educated, and take action. Don't be a bystander in your own life. The time to act is now. Let's get started. Why are the world's biggest financial players, Goldman Sachs, JP Morgan, central banks, stocking up on gold? It's not random. It's a strategic move to protect their wealth from turbulence. The main reason? Relentless money printing. Trillions created out of thin air dilute the value of every dollar. Gold can't be printed. Its supply is finite, and it's been a store of value for thousands of years. When currencies weaken, gold holds its ground. That's why institutions are swapping paper for gold. Central banks, especially in emerging economies, are buying gold to diversify away from the US dollar. This is a massive vote of no confidence in the current financial system. They're preparing for a future where the dollar isn't king. When entire nations make this move, you have to ask, what do they know that you don't? Gold isn't just a shiny metal, it's a defense mechanism. The trend is real, and it's happening now. Pay attention. Devaluation is the silent thief of your future. You put $100 in savings, but inflation eats away at its power. Next year, it buys less. This isn't just an American problem, it's global. Currencies everywhere are racing to the bottom. Each country weakens its currency to boost exports, creating a domino effect. In this environment, holding cash is a losing game. Big banks see this and move into gold to escape weakening currencies. Gold is a universal currency, not tied to any nation or policy. Its value is recognized worldwide, making it the ultimate safe haven. When faith in paper money falters, people flock to gold. Rising gold prices don't mean gold is stronger. It means currencies are weaker. The gold price is a fever chart for our monetary system's health. Institutions aren't just speculating. They're hedging against currency decline. They're protecting their assets. You should think about protecting yours. Don't let devaluation rob your future. Let's add another layer: uncertainty. Geopolitical tensions, trade disputes, and political instability are everywhere. In times of anxiety, smart money seeks safety, and that means gold. Big investors aren't gambling for huge returns, they're preserving capital. When global events threaten markets, they need assets insulated from shocks. Gold is non-political, tangible, and sits outside the traditional financial system. During crises, gold often rises as stocks fall, a classic flight to safety. Having gold in your portfolio is true diversification. It acts as a shock absorber during downturns. Institutions buy gold not because they expect crisis tomorrow, but because they can't predict the future. It's a strategic allocation for the what-ifs. That's a lesson every investor should learn. Gold is protection against the unknown. So, where is gold headed? No one has a crystal ball, but major analysts see gold breaking old highs. Some forecast $3,000, $4,000, even $5,000 per ounce by 2026. Why? Continued money printing, persistent inflation, and global uncertainty. If central banks keep buying and faith in fiat currencies fades, demand could push gold much higher. In extreme scenarios, like a major monetary crisis, forecasts go even higher. This isn't doomsday talk. It's about understanding risk and how gold responds. Remember, these are forecasts, not guarantees. Gold is volatile. There will be ups and downs, and critics will call it a useless rock. Institutions aren't timing the market. They're holding gold for the long haul. It's about wealth preservation, not quick profits. The strategy is long-term, based on fundamental weaknesses in the system. Don't get distracted by short-term noise. Think like an institution, steady, strategic, and patient. Let's talk about silver, gold's more volatile sibling. Silver has always played a monetary role, but it's known for bigger price swings. When gold rises, silver often rises more. When gold falls, silver drops harder. The silver market is smaller, so price moves are amplified. This means higher risk, but also higher potential returns. The gold-to-silver ratio helps investors spot when silver might be undervalued, but it's not a perfect timing tool. Just one more clue. Silver is both a monetary and industrial metal. Its unique dual role sets it apart from gold. Understanding silver's industrial side is key to its future potential. It's a hybrid asset, part money, part industry. That's where the real opportunity lies. Here's where silver stands out: industry. Over half of silver's demand comes from industrial uses: solar panels, electronics, medical devices, and more. Silver's unmatched conductivity makes it essential for green tech and electrification. Solar panels and electric vehicles are driving demand higher every year. This isn't speculation. It's real, physical demand. The world's appetite for silver is growing, but supply isn't keeping up. Industrial demand now outpaces mining, and stockpiles are shrinking. When demand rises and supply tightens, prices go up. Silver's 1-2 punch safe haven for investors, essential for industry. Analysts see a potential supply squeeze, with industries and investors competing for limited metal. This could push silver to new highs, even more dramatically than gold. Silver's future is powered by both fear and innovation. Don't overlook its unique potential. As gold and silver get more attention, beware the hype and get-rich-quick schemes. Ignore ads promising overnight riches or secret strategies. These are traps for the fearful and greedy. Real wealth is built slowly and steadily. The institutional approach is about prudence, not hype. Big banks buy gold as insurance, not as a gamble. They allocate a strategic percentage, never all in. That's the mindset you need. Protection, not speculation. Do your own research from credible sources. Know what you're buying and why. Decide on a portfolio percentage that lets you sleep at night. Maybe 5%, 10%, or 15%. Never go all in. Anyone who says otherwise is reckless. True financial planning is about balance. Stocks, bonds, real estate, and maybe precious metals. Gold and silver are just one part of a smart plan. Don't let hype distract you from core investing principles: diversification, long-term thinking, and discipline. Be the smart, strong manager of your own money. What does this all mean for your future? You can't just park your money in savings and hope. The rules have changed. You need to be proactive and have a plan. Recognize the challenges: money printing, weak currencies, global uncertainty. Build your own gold standard for financial security. Take an honest look at your finances and build a resilient, long-term portfolio. Stocks and bonds are still important, but consider tangible assets like gold and silver for insurance. Think of your portfolio as a house. Stocks are the walls, gold and silver are the roof. The roof won't make you rich overnight, but it will keep you from becoming poor overnight. Gold and silver are wealth preservation tools for uncertain times. Every decision must be yours, approved by you. My goal: open your eyes to the shifts happening and how the smartest players are preparing. They're owning real assets with a 5,000-year history of preserving wealth. Now ask yourself, what's my plan to protect my savings and build a secure future? It's time to take control.